Hello friends, let's start with business and financial market update. Foreign investors have turned out cautious and pulled out 2,313 crore rupees from Indian equities so far this month ahead of the release of Federal Reserve's latest meeting minutes. However, the pace of selling has come down as compared to January, with foreign portfolio investors took out 2,852 crore rupees. This was also the worst outflow in the last 7 months, data with the depositors showed. Prior to that, they made a net investment of 11,119 crore rupees in December and 36,238 crore rupees in November, according to data. FPIs withdraw a net amount of 2,313 crore from Indian equities during February 1 to 24. Last week, bond yields in the US continued to rise in the anticipation of the Fed turning more hawkish in the context of the slow disinflation in the US. In terms of sector, a clear change in the sell portfolio has been witnessed. A first half of February, FPIs turned buyers in financials while they were selling in financials in January. Moving on, 9 of the 10 most valued firms faced a combined erosion of 1.87 lakh crore rupees in market valuation last week, with HDFC Bank and Reliance Industries taking the biggest hit amid an overall weak trend in equities. Last week, the BSE benchmark tumbled 1,538.64 points or 2.52% amid concerns that the US Federal Reserve might raise interest rates further to curb inflation. Fresh foreign fund outflows also dented investor sentiments, bearing ITC. Over 10 firms, including TCS, Infosys, ICICI and Hindustan Unilever were the laggards. HDFC Bank's valuation declined by 37,848 crore rupees to 8.86 lakh crore to close on Friday. The market valuation of Reliance Industries fell by 36,000 crore to 16.14 lakh crore rupees. The valuation of TCS tumbled 36,444 crore rupees to 12.44 lakh crore rupees. That of HDFC tanked 20,871 crore rupees to 4.71 lakh crore. The market capitalization of ICICI Bank fell by 15,765 crore rupees to 5.86 lakh crore, and that of Infosys declined by 13,465 crore rupees to 6.5 lakh crore rupees. Bharti Airtel's market cap dipped by 10,729 crore rupees to 4.22 lakh crore, and that of State Bank of India went lower by 8,800 crore rupees to 4.64 lakh crore. The valuation of Hindustan Unilever slipped 7,236 crore rupees to 5.86 lakh crore rupees. However, ITC added 2,143 crore, taking its market cap to 4.77 lakh crore. Reliance Industries continued to retain the title of the most valued firm, followed by TCS, HDFC, Infosys, ICICI Bank, Hindustan Unilever, ITC, HDFC, State Bank of India and Bharti Airtel. Moving on, Adani Group needs to provide a third-party audit of accounts to allay fears of shareholders, while the concern over group debt may be overstated as its businesses are independently resilient. According to proxy advisor firm SES, the reputation loss caused by Hindenburg research report will impact all Adani Group companies in unequal measures, it added. In addition to the response to Hindenburg, who is not a stakeholder, Adani must care for its stakeholders and address all areas of concern. An independent third-party confirmation of its accounts would go a long way in establishing and restoring credibility, said the report by Stakeholders Empowerment Services SES, a corporate governance research and proxy advisory firm. Looking at the group structure of Adani, SES is of the view that group debt concern may be overstated, since each business appears to be independently resilient to muster required cash flows to service debt, with the exception that reputation loss will impact all companies, though in unequal measures on a case-by-case basis, the report added. Moving on, KV Kamath, National Bank for Financing Infrastructure and Development chairperson, expects digital sector to contribute 25% of the GDP by the time India becomes a 7 trillion economy by financial year 29. Currently, digital economy's contribution is 4%. The digital economy, digital infrastructure, e-commerce and the digital payment services can be India's biggest growth driver, he added. Moving on, Adani Ports and Special Economic Zone handled 300 million metric tons of cargo in 329 days as of February 23. Adani Ports surpassed its own record of handling the same amount of cargo in 354 days last year. The improvement in cargo volumes is testimony to the faith that our customers have in Adani Ports CEO Karan Adani said. Moving on, India has asked the IMF and Financial Stability Board FSB to jointly prepare a technical paper on crypto assets which could be used in formulation a coordinated and comprehensive policy to regulate them. The organizations are expected to present their joint paper during the 4th Finance Minister and Central Bank Governors meeting in October 2023, Minister of Finance said. Moving on, growth is the only oxygen that India needs, McKinsey India senior partner Jayajit Barat said. The drivers of margin accretive growth are relentless cost and value engineering, quality of revenue, new business model, scale benefits. He further said, companies must choose a growth mindset, constantly evaluate resource allocation, pursue adjacent opportunities, and serve global markets, he added. Thanks for watching this video. Stay tuned with Financial Pulse for business and financial market updates.